All right, and welcome back for another episode of Carnivore Trades. Today is Wednesday, December 14th, 2022. If you've not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, what do we make out of today's price action? Well, I'd have to say anyone's guess is probably as good as mine. My thesis here is that this is probably 90% of this move here in the last 60 to 90 minutes is OPEX related. If you followed Jerome Powell's press conference, it was about as hawkish as you can be. He said that, our job's not done. We're continuing to raise rates. And once we get to our target, we may have to leave rates elevated, for an extended period of time, even once we get to our target. They're looking at 5.1% for next year, et cetera, et cetera. And the markets are actually holding up. Take a look at the VIX here. Actually down now over 5.5% here on the day. And actually took out, the lows from earlier and took out yesterday's lows as well. However, it's not like this is a huge victory for bulls, right? There's some sectors that are down pretty decently as well. XLF leading to the downside actually made lower lows intraday. But there's a pretty good mixed bag. Bonds are actually holding up okay. The 2-year is still well below where it was earlier today. The 30-year is getting a little bit more of a bid here. And the spiders are, they've come in, but they're not, they haven't taken out that low from when Powell started talking. And there is the closing bell. Let's take a look here. So we just closed above. We're going to take a look at the spiders here. So we just closed above yesterday's low. So yesterday's low 399.07, and today's close is 399.38. So a small victory there for the bulls, I'd say. But again, going back to what I was originally saying, they really hammered the VIX here. Look at the VIXy there. This is actually held up, but the actual VIX took a pretty good spill. So to me, a lot of it is, bears won initially. I guess you have to say they won. The market's lower, but there's no definitive move here, right? This has got to be the first FOMC all year where we didn't have a big pump or a big sell and follow through to the downside or the upside. And this has been, again, with the zero DTE thing. Look at where we were a month ago off of the last CPI pump. The end of that Friday there on the 11th, they announced zero DTEs. We're going to be on the SPY and QQQ every day on the 14th right here. And look where we've gone. We're completely sideways from that. So zero DTEs probably playing a lot of a role in that. And then we have Quad Witch in 2 days. We might need to wait until Monday to really get a move here definitively. Maybe it's tomorrow. Maybe the market digests it overnight and realizes, Powell was extra hawkish and we sell off. Maybe this was zero DTE related just today. Maybe it's Friday OPEX. I don't know. We're really no closer to having a definitive answer. Again, we gapped up yesterday. They faded that pretty good. We closed back below this trend line. We closed below the 200 moving average. They saved the 20 MA. The 20 MA is minor. I wouldn't make too much out of it. The ES here, we did close back below this trend line, and we've never closed above the blue trend line either. So what do you make out of it? We went right up to that upper trend line today or yesterday and had a big tail candle, and another rejection today at the blue trend line. So it's really again, your guess is as good as mine here. I'm not going to tell you guys something like, oh, we're definitely bearish, we're definitely bullish, because honestly, at this point, it's such a mixed bag that, I can't really give you a bias one way or the other. I can go through some sectors here, and we can look at a few things. So let's take a look at the Qs. So again, Qs closing above yesterday's low. So again, let's not make too much out of that. A little bit less volume there. And again, the Qs are still outperforming on a relative basis. They were down 74 basis points today versus the spiders 64. But again, they never closed below this green bar last week, which the spiders did. So that does show me a little bit of relative strength. If we do hit, push to the downside, this is going to be your major level now. So this yellow upsloping trend line and the 280 level. The 280 level was major to begin with, but a break of that does give the bears full control over the market. For the spiders, I'd have to say probably anything below today's low sends you back down to that 292 area, and then again 290 is going to be the really, 390 is going to be the really big level there. A break below that, bears are in full control of the market, and then a break above today's high, which coincides with this downsloping trend line, is probably going to give bulls the upper hand here. And then you have a little bit of resistance at gap fill, but we already kind of gapped up to it yesterday, so may become a little bit minor. So if we were to push through that, maybe I'd give the market the upside bias maybe to 415 rather than just the gap fill at 411.73. I mean, we got pretty close there yesterday. So again, a really, this just goes to show you OPEX week, you got to be kind of neutral here, unless you for sure get definitive moves in either direction. But I mean, market makers are probably laughing right now at this. Just look at the price action here on the spiders the last 2 hours of the day. So all over the map here. And again, they push the VIX lower, and that helps them to be able to sell the market if they need to and push it lower without crashing things. So essentially, that's why you had that big dump in the VIX. At least that's the way I see it here. So to me, it looks very, very much OPEX related here, what we're seeing. Russell 2000 here. So it looks like we just... Wow, so we closed 1 penny above yesterday's low here. We did hold the 50 moving average, but again, the Russell with lower highs here on the daily. So that is a weakening indicator, and the Russell can be a leading indicator as it is it's the risk index essentially. So small cap index are leading to the downside, and you do have a series of lower highs here. So that is something to be careful for. 178 on the dot, which is the December 12th low. If that breaks, that could bring you down to that trap door of this gap fill around that 174, 175 handle there on the Russell. So just be aware of that moving forward. Dow again, coming in just like everything else here. It did hold the 20 moving average by the end of the day. So let's give that one the benefit of the doubt as well. Semiconductors. So semiconductors closed basically just above that 200 moving average. We filled the gap there, and they're holding up okay. They weren't never really that strong all day long. They actually lagged just a little bit, and they actually closed well below yesterday's low. So a little bit of a sign of weakness there for the semis. Again, it's hard to make too much out of this here, as there was just no real conviction in either direction here. But in any case, IGV, let's move on. Closing back above this white trend line that goes back a long ways there. And we held yesterday's low here. Again, cloud holding up okay. Again, let's not make too much out of it. Let's wait till tomorrow and see if we can get some follow through to either side here. Dow transports, again, series of lower highs, so possibly a leading indicator of some weakness here in the market. But, they held up okay. They actually closed green on the day. So, up 60 basis points. And I do think, again, this is kind of an OPEX thing here. So big picture, we have lower highs. But today it was actually green. So maybe short term, we have a little bit of a bounce in the spiders. But bigger picture, it is showing signs of weakness. Again, with OPEX, you'll get these moves, or one sector will just be inexplicably green. Other sectors will be inexplicably red. And that's just the nature of the beast here. Let's move on to interest rates. So the 10-year, basically flat on the day. So just up 2 cents there on the yield, the TNX there. And for the most part, bonds held up okay. 30-year, again, basically flat up 11 basis points. You see the ZB there still has an inside bar pattern here on the daily, but I still have a weekly sell signal on this. So just be aware of that. We'll see where it closes out the week. But again, remember, we have OPEX Friday. Again, they could just be pinning this sideways until the end of the week. Same thing here with the 2-year. So ZT basically holding up. It was up 2 basis points on the day. It did finish with lower highs, though. So we did sell off pretty nicely. We took out this low, and now we potentially have lower highs here, whereas you look at the 30-year, and the 30-year actually, took out the high from pre-FOMC. So 30-year holding up a little bit better here on the long end of the curve, that is. And we had the yield curves actually coming in. So 2s and 10s, and 3-month 10-year came in a little bit. 3-month and 10-year is basically at the lows right now. So just just keep that in mind. XHB, again, lower just like everything else. The ITB did hit my 65 handle target to the penny yesterday. And that did pull back. So we'll see what that does. But again, this is still a sector that's holding up well. So we'll give that one the benefit of the doubt for now. VNQ also backing off, but it held inside of yesterday's candle and again held the lows by the end of the day, so it's holding up okay as well. XLF, this one is still on the weaker side, down 1.31%. Lost yesterday's low, and again on the intraday, it made lower lows pretty much ever since the FOMC announcement. And financials continue to show weakness. You guys know I've expressed concerns about the XLF, the banks specifically. KBE here broke last week's lows. So regional, there's the KRE regional banks and large banks are now actually testing the September lows now. So lots of weakness here in financials. And again, I've talked to you guys about this extensively. I do not like what I'm seeing from the banks here. Broker dealers making new month, lows since November 9th here. So testing that 50 moving average, it probably gets a bounce there. It's a little oversold going into that. But again, showing leadership to the downside. I don't like it when I see financials lead to the downside. And again, you guys know I've talked about that pretty much all last week. So no need to go over it again. But we did close below this green bar low here on a daily basis. So take that for what it's worth. Anyways, crude oil here. Crude actually continued higher. We'll see what it does tomorrow, though. So this 20 moving average has been resistance lately. But it got a nice bid here. And that was with, again, the 10-year basically flat. So it wasn't really, we're kind of seeing a little bit of a divergence here from the relationship of energy and yields. Again, this is another kind of thing that adds to the case that this is OPEX related. Correlations will often break down during, an OPEX week. And again, we got 2 days left here. We'll see. Maybe they push it down. 75 is a whole round number. So we'll see. Maybe they close it in that area. But a nice little bounce there for crude. I wouldn't do anything with it at the moment, though. XLE. This is another strange one. So this held up really well. Again, little dump out and then really just kind of an inside bar here into the close. So this was a stronger sector. And again, more evidence that this is OPEX related. If you ask me, XOP down. It did close back below that 200-day moving average for what that's worth. And the OIH also tested the 20 moving average, backed off a little bit. But again, this has been a stronger sector in the energy realm lately. So we'll respect that for the time being. I still think it goes down to that 260 handle, though. Nat gas, this has become a literal circus here. So, up 10% the other day, and then right back down intraday, right back up yesterday, and right back down today, closing below the lows and basically testing that 635. Basically got to gap fill there. You have that 50 moving average just below. I would not touch this thing at all right now until it gives you some type of a real good pattern, or maybe gets into this $5 level in a straight line. Then I would consider going long. But right now it is absolutely all over the map, and I want nothing to do with it. Dollar index. So this continued to head lower. Again, we had a little bit of a bounce there. We rejected that 200 moving average the other day. We sold off again yesterday and then closed below the lows today. So dollar continuing to show a little bit of weakness. I do think it wants to head lower here. Does that help the market out? In theory, it should. But lately, the dollar has been pushing lower. And, take a look here. Let's go back to November. Yeah, so here's the last CPI announcement. And then here's November 11th. And there's the 14th. So the dollar has really been in a downtrend since November 14th. And if we look at the spiders, it's been flat since then. So dollar really, that kind of like dollar up, SPY down, and vice versa relationship has started to break down here. So we'll see what we get. And I'm still kind of favoring a little bit more downside in the dollar index. Maybe it holds up into the end of the week due to OPEX. Sure, possibly. But I still think it probably at this point wants to go down and test that 102 handle. But we'll see what we get here. It did show some weakness today, closing below yesterday's low. Gold here, an inside candle. It held up really well. Take a look at the GLD here. Nice sell-off, and it recovered right to basically where it was pre-FOMC. So gold holding up. And it looks like for once the whack isn't on, right? So that was something I warned about last week. They usually hit gold really hard into OPEX. And they haven't done that so far this week. In fact, silver also held up really well as well, and it closed green on the day, up 65 basis points. So it's just a very strange dynamic here, especially to see silver outperforming. So it's almost like the inflation trade is still on here with silver continuing to rise, but rates are, rates via the 10-year here have been pulling back. just a lot of strange price action going on lately. But yeah, we'll see what we get next week. I think that's really going to be more telling of what the real move is here after we get through this quad, which I hate OPEX week for this reason specifically. But anyways, platinum here continuing to chop inside of this wedge pattern, a little bit of an inside candle there. I'd be considering a long position at this 1,000 handle if we were to pull back into that area, but ultimately I wouldn't do anything with it at the moment. Copper here, again, just stuck in this range, but just be careful. This is still a weekly inside pattern until proven otherwise. We need to close above 396 on a weekly basis to negate that. But copper is holding up for now. So again, we'll just leave it at that. Bitcoin. Again, Bitcoin actually holding up. So actually closing green here, up, well, just 30 basis points. Pretty much the rest of the cryptos are negative for the most part. You see Ether there down fractionally. But crypto's actually holding up a little bit. And that's despite all the trials going on and everything. You know, it's hard to make too much out of it. We did have a nice little bullish pattern push up here. If this continues to consolidate, it could go up to that 19,000 handle, which is going to be that red bar high there. And that's also going to kind of coincide with right where you broke down from. So that would be resistance there. But, you know, Bitcoin showing a little bit of relative strength. Just, again, be aware this is a big picture is a bearish pattern. All right. So, yeah, back onto the spiders here. We're basically up. Yeah, we're up decently after hours. So, yeah, hitting that 400 handle. So spiders getting a little bit of a bid. Again, might have been some 0 DTE nonsense going on today. We closed right at 399. Is it any surprise that we closed just below the whole whole number of 400? You know, whole round number. It's an OPEX. Totally an OPEX thing here, and I bet there was a ton of calls and puts sitting right at that number for today. The 0 DTE price action is pretty much out of control at this point. But again, I don't know if we get any clarity tomorrow. I would hope that we do, just because this range has been really a challenge as a trader here, and I don't think anybody likes this. You know, regardless of whether you're long or short, it's like you'd almost just rather have it break one way, and then you can be done with it, and we can move on with the trend. But we've been stuck in this range, and not even Powell can move the markets this week. So we'll see what we get tomorrow. And we might have to wait until Friday to get some real action here. But in any case, I'll let you guys know if anything changes. Anyways, I'm going to wrap it up here. You guys come find me on carnivoretrades.com. I'll talk to you all tomorrow.